If we took this trade, we would have our stop loss about there. We would enter the trade at the close of our DarkCloud cover, and then if we're going for a 1-to-1 risk reward ratio, we would easily get that. If we're going for a 2-to-1, we would have got that as well. Hi traders, welcome to today's video. Today we are going to discuss the DarkCloud cover. The DarkCloud cover is a candlestick formation that we use to counter trend trade when we have a defined uptrend in place. It's also a scalping strategy. We look for this formation when the market is making a new thrust move upward and look to scalp a 1-to-1 or a 1-to-2 risk reward ratio. Please bear in mind that this is an advanced strategy and only traders that have been in the markets for a few years should be looking for setups like these. Trading against the trend can be very taxing on the emotions, but it can be a very profitable way of extracting capital from the markets quickly. In the DarkCloud cover candlestick pattern, we are selling into buying pressure once we observe that it is dwindling. This strategy is ideal for traders who do not have a lot of time to trade and need something that can give them a few good setups in the space of an hour or so. With that being said, let's take a look now at the characteristics of the DarkCloud cover. These are points that we should check off before looking for any of these setups. Number 1, the market is in an uptrend. Number 2, there is a long green candle after a peak or thrust in the uptrend. Number 3, on the next candle, it is red and opens very near the high of our previous candle. Let's take a look exactly at how we're going to trade this pattern. Over here I've actually identified a very good example of the DarkCloud cover, and as I previously mentioned, when you're trading this setup, it's going to come down a lot to experience and understanding of how the market moves. Also, it's going to be very dependent on which specific market you trade. The setups are going to be a lot more different if you're trading it on ES compared to CL, for example. But I do find that the smaller time frames work really well with this setup. Okay, so let's take a look at this one and I'll zoom in for us. Now, first of all, let's take a look at the characteristics that I just mentioned. Okay, we have to have an uptrend, and that's what we do have. We also need to see the green candle which is forming as a thrust move up in our uptrend. For example, if I saw something, a DarkCloud cover around this area, this would not be an area to take a DarkCloud cover trade at all. The idea is that we are looking to sell into buy pressure that is overextending itself. So we need to see this green candle form at the end of a thrust move. Okay, so our next candle is our red candle. This is our DarkCloud cover, and you can see by this example, let me just get my mouse. You can see this example, we open right at the high of the close of our previous green candle. The closest we can get our open of our DarkCloud cover to the high of the previous candle, the better this pattern is going to be. Now, we've checked off all the marks with this. How are we actually going to take this trade? So let me just remove the arrows first so we can get a better idea. Now, the first thing that we should do is realize that if the price decides to trade above the high of our green candle, which is this point, most likely our setup is incorrect at this point, and we would like to get out at a loss. So really it's up to your risk tolerance where you'd like to put your stop loss, but for me, I'd like to put it anywhere above the high of our green candle. Our entry is going to be at the close of our DarkCloud cover candlestick. This is a very important aspect as well that you need to keep in mind, because with the DarkCloud cover, we want to see a very full red body in the candlestick. Some traders like to use this with bars because it gives them a better idea, but for me, I've always been used to using candlesticks, so I'll continue to use them. Now, if you see something form like this, for example, let me put an arrow for you. If you see this is not a good example of a DarkCloud cover. I understand the previous candle is, it's not really a DarkCloud cover setup, but if you see a red pattern form like this, it's something that we need to avoid for sure. So now that we've got our entry and we've got our stop loss placed, we have to now decide where we're going to set our profit target. Because this is a scalping strategy, we want to see the market move in our direction very quickly. We also do not want to be sitting on a trade for too long. As I mentioned earlier in the video, this is a good strategy for traders that don't have a lot of time behind the computer screen. An ideal area that we look for is about no longer than 15 minutes holding this position. So the first thing that we can do is we can set a 1-to-1 risk reward ratio, which would be around here. Once we get to this point, we can either completely liquidate our position Or we could take half off and then put our stop loss to break even, and then go for 2 to 1 on the next profit target, which is down there. Again, it's completely up to your own trading style and how good you feel about that specific trade. Let's take a look now at some more confirmed entries and some false entries as well for the DarkCloud cover. I've marked a few examples on this chart. This is the 15-minute chart for crude oil. With this one, we actually have a confirmed entry. A few of the characteristics again that we needed to check off was we have an uptrend, which we have here. This is the start of an up move, a thrust move that we get our green candle, and the opening of our DarkCloud cover, which is the next one, opens very close to the high of our previous candle, and then the body of our candle as well is very full with a strong red body and a very small red wick. Because this is at the top of a thrust move, we can take this position with no problems whatsoever. If we took this trade, we would have our stop loss about there. We would enter the trade at the close of our DarkCloud cover, and then if we're going for a 1-to-1 risk reward ratio, we would easily get that. If we're going for a 2-to-1, we would have got that as well. So let's go a little bit more to the right. I confirmed an entry here as well, and this one's slightly different because with our DarkCloud cover we actually pierce above the high of our green candle that we had. We still have an uptrend and we are at the top of a thrust move, so this is an okay entry to take. But be careful of certain entries like this. In this case it's okay because the size of our red body is very much in proportion for what we look for with the DarkCloud cover. But if I saw this wick was slightly higher than where it is right now, then it's not a pattern that we would take actually. We can get away with a few ticks here and there, but more than that is looking for trouble. So that's another example of a confirmed entry. And I did find a few more entries here, and this is an example of a false entry. Now in this one we can actually mark off pretty much all the characteristics that we need to. We do have an uptrend even though it is a low volatility period in the market. We also see the formation towards the top of a thrust move. So why is it that we can't take this trade? Well, there's one big reason, and this is the most important, and that is because our open of our DarkCloud cover, which is this red candle, is too far below the high of our green candle. If I zoom in a little bit, you'll see we're quite a distance away from that. If we saw an open around here, then this would have been a perfect pattern, but we are far too far away. In fact, if I even draw a Fibonacci retracement, you can see that we've actually opened at the 61% level. This is far too distanced from our high of the green candle, so we do not take that type of entry. And I did mark off another false entry as well for us. And here it is. Now this is textbook. On paper would be a perfect DarkCloud cover if we are just looking at the formation itself, which is this. If we're looking just at the candlestick formation, it would be perfect. But because we are not at the top of a thrust move, this is not a DarkCloud cover formation that we take. Now we do have an uptrend, which is very perfect. I mean, it's a great uptrend. So any kind of DarkCloud cover formations that we see, we would be more than happy to take a short trade on this, selling into this buying pressure. But if you just take a look along this trend, there's really no DarkCloud cover formations at all. You could say that this potentially could be one, but the red candle engulfs the entirety of the previous green candle, so this is more of a bearish engulfer at this point. Now if we saw this example over here form up over at this point, and instead of having this small period of consolidation before the formation occurred, then this could have been a perfect entry for us. But because it's too far gone now and it's not at the top of the thrust move, this is an example of a DarkCloud cover formation that we need to skip. Traders, I also want to mark off a few other things that you need to look for when you look for this pattern. We must not confuse this pattern with bearish engulfers, because if we do that, we are not looking for a scalping strategy. A bearish engulfer is more of a reversal pattern, and bearish engulfers can occur in uptrends as just small retracements and then a continuation in the uptrend. If you see a bearish engulfer form like this, don't get confused with the DarkCloud cover and the bearish engulfer pattern, because it has already sold off too much, and for a scalping strategy there's not enough left in there for us to actually scalp out of. I picked another example that we can actually end off here, which is a good example of a perfect DarkCloud cover entry. In fact, if you see something like this, This is a textbook example, and I'm going to zoom right into it. We have our uptrend, we have our strong green candle which is here, and then our open of our red dark cloud cover is pretty much right at the top at the high of our previous green candle. Also, the close of our dark cloud cover is very full, giving us a full candlestick with no wick, and this gives us a great opportunity to take a quick scalp trade. Traders, that brings us to the end of the dark cloud cover scalping strategy, but before I do let you go and you attempt taking any positions using this system, I just want to reiterate a few very important things with you. Number one, I did mention earlier on that this is an advanced strategy, and what I meant by that is usually when we develop trading strategies, especially for day trading, we can fall into two main categories. The first category is going to be systems that we have clear defined rules for, and the second category is going to be discretionary trading. So of course the first category speaks for itself. These are systems that we could basically code into a robot that could trade for us. But for discretionary trading, we are using our market experience to actually take our decisions. So we're doing our technical analysis, and we're relying on the fact that we've spent many times looking at the way this market or specific product trades per day, that we are relying on our own decisions and feelings of where we think it's going to go to take our positions. With the dark cloud cover strategy, we're definitely falling more into the discretionary side of things. And even though we do have our checklist, which is very, very important to check off before we take each trade, if we don't understand exactly how the specific product is that we trade moves, then this system is going to be completely useless to us. For example, if you're trading the bonds, if you bring up a bond chart, it doesn't really matter what time frame you bring up, you probably aren't going to find many opportunities using this specific system. However, if you go to something that is a lot more volatile, such as crude oil, you'll probably find many opportunities, especially in the lower time frames. It's also a great strategy if you only have a few hours to trade per day, or even less than that. And on top of that, it can just be one addition to many different scalping strategies you use in the future. This is just one example of the many strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. Look through the various testimonials, trading interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24/7. Track your trading performance using our advanced account analytics feature. Discuss trading ideas with other traders on the members area and Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability with OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.